Every addiction arises from an unconscious refusal to face and move through your own pain. Every addiction starts with pain and ends with pain. Whatever the substance you are addicted to, alcohol, food, legal or illegal drugs, or a person, you are using something or somebody to cover up your pain. Before we start the show, I just want to say that I'm not political and I'm not advocating for any specific political party. I'm just commenting on what other people are saying and if it's true or if it's not true, if I agree or disagree.
Well, again, I mean, this is really, really recent news, but if you look at some of his historical rhetoric, and you know, he's a capitalist by nature, private equity guy, I believe. He, from what I've read and what I understand, believes that having the U.S. dollar as the settlement currency is causing the U.S. an unnecessary headwind economically, and that the U.S. would benefit from a weaker dollar. And you can see it whenever there's a challenge or an issue in the broader capital markets. There's a massive flight to the U.S. dollar, and you see it spike for no reason at all. It arguably may be one of the weakest currencies, or should be one of the weakest currencies in the world by virtue of the amount of debt that they have on the balance sheet. But regardless, because it's always sat as sort of the de facto settlement currency for all things commodities, you see this flight to what they call safety, and I would call the U.S. dollar the furthest thing from safety. But that is indeed what happens. It's not to gold. It's not to crypto. It's basically to the U.S. dollar. And typically, you see the crypto and gold actually sell off in those situations, and then ultimately they rally, which is what I think you're seeing now. So I think Vance wants to eliminate that. They want to eliminate the U.S. dollar as sort of the de facto settlement currency. They want to allow the U.S. dollar to trade where it should trade, which many people would argue is in a much less in a weaker state against many other currencies. It'll be interesting to see how they go about doing it. But one of the ways of doing it is embracing crypto and embracing Bitcoin. And so
J.D. Vance, as well as Trump, are pushing for a weaker dollar. They're doing this for numerous reasons, but one of the big reasons is to bring manufacturing back to America. And you can't have a strong dollar for exports. You would need to have a weaker dollar to stay competitive on a global market. So by embracing crypto assets, he specifically mentions Bitcoin, but what do we know that's a settlement asset? A settlement asset at the same time, the campaign is around trying to bring the crypto industry to the United States. So the goal is to take the dollar out of exports as a settlement vehicle and at the same time try to embrace crypto so the United States has a competitive advantage. While Ripple is in the United States, when they sell XRP, the capital gains goes to the government. So every time they sell XRP, that's taxed and the US government benefits. So you have a presidential race that seems to have now embraced crypto. You heard Kamala Harris say that she reached out to Mark Cuban as well as Brad Garlinghouse. So this is very bullish for the crypto industry at large, but just by weakening the dollar, that could cause a bull run by itself. But by embracing crypto as a settlement vehicle and kind of throwing away the dollar's purpose as a settlement vehicle, we're talking about immense amounts of wealth being ushered right into the crypto world.
Trump wants more things made in America, right? So a weaker U.S. dollar helps U.S. goods become more competitive. So if you're actually creating an economic entity, i.e., the U.S., and you're bringing everything home, you're bringing production home, you're bringing factories home, and these are all very, very well-known policies for the Trump economic campaign. By weakening the U.S. dollar, you make all of that new U.S. production, all of those entities, those commodities, goods and services, you make them far more competitive globally. It is ironic, though. It should create a little bit of inflation as well, and they're also they're running an anti-inflation campaign. So there's some juxtaposition there. But As I was mentioning, I have a master's degree in economics, econometrics, started my PhD. If indeed this is the platform that they pursue, like I said, weaker US dollar, stronger Bitcoin, stronger gold, all things that would be very, very good for US production.
Recently, we've seen a sell off in the stock market. We've seen a sell off in crypto. So, why is that happening? Well, when you look at the US 10-year, you see that the yields have dropped significantly. And this happens when investors dive into bonds. So, there was a scare, and it caused the large investors to buy up 10-year treasuries, and this put a pressure on the yield. They work inversely. So the yield moves up when there's not enough buyers, and it moves down when there's too many buyers. So the price of the yield moving down indicates that the entire market is scared about something, and they're buying up bonds. Now, prior to this, a day or two before the sell-off, the Fed came out and said they're going to leave rates unchanged. Now, it's important to note that the Fed is not trying to control the market. What they do is they follow what the bond market is doing. And the bond market is telling the entire world that there's trouble ahead. Most people are wanting to see yields drop, and that will put more pressure for asset prices to move up. But before that happens, what's going to happen is the interest rates are going to drop, and the Fed is going to follow the interest rate. So that's a really important dynamic, because the Fed's not going to just lower interest rates. The market has sent a warning to the Fed, you should lower them now. If they don't do that, the market's going to collapse, and investors are going to jump into yields, pushing the price of the yields down, and the Fed will ultimately capitulate and start lowering interest rates. And they can do it the easy way, or they can do it the hard way. Let's see what happens.
Capital markets and strategists, we were talking about your history with BCA research and your background. I would not be surprised if you start seeing, as the election approaches, definitely you're going to see, you're on the record here with me saying it, you're going to see crypto starting to trade up to that $90,000, $100,000 level. And I wouldn't be surprised that with a Trump victory, you see it moving into that $100,000 and $150,000 level. This is a huge trading opportunity for individuals, in my opinion. And when you put companies like DeFi, we're only trading at 3-4 times earnings right now. Most companies trade at 20-40 times earnings, especially growth companies. This could be a huge boon for a company such as ours. And in my opinion, a huge trading opportunity for people who want to get long Bitcoin in the crypto space.
I ultimately agree with what he's saying. However, when you really think about how this plays out, like I said, the interest rates have to drop and the Fed has to follow. So that could equate to market turmoil, and then interest rates lower from the Fed, and then you start seeing the bull run happen. This could be years in process that this takes. So it's important to note that, not just assume that once they lower interest rates, we start a bull market. Yes, that does happen, but it happens very differently when it's played out. It happens with market turmoil, a long period of consolidation, and then ultimately a bull run. So that's very important. There's definitely opportunity out there, but it's how you play the market and your timing that matters.
Same time could offer some of these technological advantages of real-time settlement, instant cross-border payments, all this stuff. What they're doing now, what I've noticed, is they're trying to find ways to co-opt stable coins to make them kind of backdoor central bank digital currencies. So Senators Loomis and Gillibrand a month or two ago released the Loomis-Gillibrand Stablecoin Payments Act. And I read the bill, and basically it says in there that every single one of these stablecoin companies is going to be required by law to custody all of their T-bills at Federal Reserve depository institutions. And so taking all of the stablecoin money that's currently outside of this banking cabal and forcing it, by law into the banking cabal. And so in that way, it goes onto their networks. They now have access to that transaction data. They now have control over it. And so the American people believe, oh, this is issued by a private issuer, by Tether or Circle. But in reality, it's going to become part and parcel of the Federal Reserve System. And I think
I've been saying this the whole time that stable coins or CBDC, it does not matter. What's going to happen is all the reserves that back stable coins are now in the Federal Reserve's control. So the whole idea of using a stable coin because it can't be frozen, it's got some no restrictions like cash does, is not true. This is just going to be a liability of the central banks issued by the banks. So there's layer after layer of different intermediaries that are going to be backing these dollars and ultimately having control of these dollars. So the idea that we can escape this control system is just not true. Coins are paired to crypto assets. So naturally, if the government starts issuing hundreds of trillions of dollars in stable coins, it's going to have positive correlation with the crypto asset ecosystem. But if they're able to increase the price, they certainly will be able to decrease the price. So the idea of migrating to crypto or gold and silver to reduce your risk of government control is going to have less and less impact as the government gets more involved with the crypto industry.
Of digital networks is the ability for law enforcement to be nodes on the network and to observe transactions anonymously or pseudonymously. And when you see transaction flow that indicates wrongdoing, and you use big data analysis, you can use artificial intelligence a lot to analyze flows, only then do you interdict the activity. In other words, instead of a system we have today that if I want to do any transaction, including a lawful transaction, I've got to give up my identity in case I'm doing something wrong. That's the system today. We go to a system where I freely engage in commerce, and only if that commerce indicates a probability of something wrong is my identity disclosed. Let me tell you how common that is. That's what we do every day in highway law enforcement. We don't stop you before you get on the highway and say, give us your name, your identity, where you live, in case you speed. You get on the highway freely, and if pattern recognition, i.e. speeding or driving without your headlights on at night or reckless driving, indicates something wrong, then your activity is stopped, and then your identity is given. So instead of an identity first system, which we have today, in case you do something wrong, let's actually abide by the Constitution that says the government needs probable cause to investigate. Go to a system where if there's probable cause as shown by transaction flows. In other words, instead of taking $5,000 out of my retirement account, putting it in my checking, an otherwise innocuous activity, if I'm actually sending $45,000 payments to some dodgy address in Nigeria, and I don't mean to pick on that country, some country that's known for illicit activity or some activity that indicates something wrong, that's when government should step in. And the beauty of digital networks is that activity can all be viewable with government as a node on blockchain. So the time has really come to rethink AML KYC. Now, you asked about.
Everybody's worried of a dystopian future that involves CBDCs and ridding the world of privacy, but I argue we're already in this world. And the adaptation of using stable coins will feel like people have freedom, but the reality is they'll have even less freedom. As Chris Giancarlo states, law enforcement will host nodes. A while back, the SEC hosted a node on Ethereum, they hosted it on Bitcoin, and they also hosted it on XRP. Ripple has created a stable coin. When the stable coin's being used all over the globe, Ripple is going to have to follow what the government wants them to do.
Competition, which, to be honest, crypto has weathered the storm of higher interest rates that we've had over the last 2 years actually pretty well. Obviously it came down with stocks in 2022, but pretty much everything had a bad year that year. Bonds had a bad year, stocks had a bad year, crypto had a bad year. That was just basically people getting used to this idea that, you can have interest rates up at 5%. They're not particularly high for one, actually, someone as old as me. I remember when US long bond yields below 7% were considered to be almost uninvestable. So, it's there. I think the most important thing for crypto now is it's become institutionalized. It is that institutional involvement which gives it a lot more gravitas, not necessarily removing the volatility, but it gives it a lot more gravitas and the idea that people take it seriously. And it also has the advantage that with gold as not overvalued, but performing so well, it's another alternative in a world which is still beset by fiat money, and where the fiat money is basically still looking for better returns.
My wife always asks me, did we miss it? The last bull run, did we miss the entire run? And the answer to the question is no. They're not done devaluing the dollar. They're going to destroy and decimate the dollar. We're looking at $1 trillion to $2 trillion market cap. That's peanuts compared to the bigger picture. Not even the whole gold narrative. We're talking about every financial application being hosted on blockchains. We're also talking about a new paradigm, a new form of applications that cannot be taken down, new forms of software. Look at what happened with Microsoft Azure and CrowdStrike. All planes stopped for an entire day. This technology is capable of creating a new industry and swallowing multiple old industries, and financial applications just one of those. So when the floodgates open, we're talking about a market cap that's much larger than gold will ever be. People tend to dwell more on negative things than on good things. So the mind then becomes obsessed with negative things, with judgments, guilt, and anxiety produced by thoughts about the future, and so on. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon or my ghost site, dmjr.ghost.io.